But I think the overall takeaway for the US jobs market is that it is still holding up. It's still pretty resilient.
That's right. Yeah, the resilience is impressive. I think, when you look at the longer term trend, let's say the 12-month trend, there clearly is a deceleration in the growth rate of US jobs. But that's come in the face of really remarkable interest rate hikes and then, of course, historic inflation. And so, given those headwinds, yeah, the jobs growth is impressive.
A lot about layoffs in the tech sector. We've heard it from Amazon, from Meta, from Twitter, obviously catching a lot of headlines. What sort of impact is that going to have on the overall US employment situation right now?
We remain optimistic right now that those layoffs are going to remain concentrated in the tech sector. We see the tech sector as comprising roughly 7% of the total US workforce right now. I think the question becomes, do those layoffs in some way spill over and start affecting other sectors? We're in a fortunate position right now where the demand for workers, particularly high tech, high skilled workers, is so strong that I think a lot of those workers are going to ultimately be absorbed by other companies. If, however, we find out that some of tech's sort of overhiring is more pervasive and actually extends into other sectors, that's when I start to get really worried.
I don't know if you were listening to the Powell speech the other day. I'm sure you were because all market participants were. But I thought what he had to say about the labor market situation in the US was really interesting because he talked to a shift in structural trends. He mentions aging demographics, reduced immigration, COVID-related reasons for people dropping out of the workforce. All of these are reasons that he gave for the labor market being so tight in the US. What do you think these structural reasons do to inflation in coming years?
I think on net, it will be, drive an upward trend in inflation in large part, again, because I think some of that decreased immigration pairs with basically a switch in preferences for people, particularly in the US, preferring more things to be made at home, a general concern around supply chain disruptions. All of that, I think, on net will increase the cost of a lot of goods that ultimately will be passed on to consumers. There are, of course, longer run trends in the US and in Western Europe that have sort of driven interest rates down over time. And I think the question is to what extent do some of these sort of near term acute drivers of the economy fade and we sort of resume or return to some sort of longer term outlook.